Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, August 14th, 2008. Well, I want to get right into the analysis portion of the video today after we just touch on what the markets did today. And notes to no surprise, really, you saw the markets bounce slightly higher today after a two-day pullback. Today we saw the Dow moving up about 83 points, the Nasdaq was up about 25, and the S&P was up about 7 points. So a nice little bounce back effect after a two-day pullback off the mega run that we saw in this market. And I really want to focus today on support and resistance lines on the daily charts. So we're going to take a look at support and resistances on various commodities, the indexes themselves, and really focus in on how do we know if this market ever breaks down, because In the Money Stocks does believe that we should see more upside, but there's a small chance of a downside move here over the next couple days, and we have to just touch on that in today's video. So I want to touch on that first, but keep in mind that right now you just continue to kind of feel like the market could go either way over the next day or two, and that's basically a neutral stance on the market after the two-day pullback we saw. All right, let's get right into this intraday movement, because today was unique in that we had the CPI data and jobs data at 8:30 a.m. Eastern Time this morning, and what we saw was actually a pretty harsh sell-off on that news, and you can see it right here, folks. This is when the CPI news came out, which really shocked the market. The CPI came out, and that's basically its consumer price index, and the CPI gauges the prices of goods, basically an inflation gauge. And what it showed today was it was hotter on the top line and bottom line, meaning the CPI number and the core CPI number were both hotter than expected. And what that's telling us is that there's inflation seeping in not only through food and energy, but in all other goods. And that obviously got a negative reaction, as we see here, but it was unbelievably, or in many ways, a very short-lived negative reaction. You saw the initial drop here, sideways trading, and then once this market got to that 10 o'clock time frame, off to the races we went. And the market just picked up and ran. And what you really saw here was the move on oil yesterday started to give up some of that gain. And as soon as oil started to dip, you saw the markets take off. XLF, meaning the financials, and again, the ETF for that is the XLF, really took off as well. And that was a big catalyst to this rally as well. This combined with oil really led the markets up. And what you can see here is you had a nice move, then a sideways pattern, or consolidation pattern, another move right up here, and then another pullback into that same level. And those of you that were in the chat room, some of you guys pointed this out, and we agreed with you. This is a head and shoulder pattern, pretty much, and it's oftentimes a bearish pattern. You can see this on the SPY or any really chart. And what you're really looking for here is a breakdown of this neckline. All right, when this neckline gets broken out, you usually get continued move to the downside, right to that 50 moving average, as beautifully seen in this chart. And at that point, you kind of just trailed off and bounced off of that level on the futures and on the SPY. I can show you that same pattern here. Let's flip to the SPY intraday. And here it is again. Perfect. There's your head and shoulder pattern. And there it is. So you would basically you want to take the neckline, approximate neckline, breakdown point, right to the moving averages support here at the 50 moving average. And again, the market just trailed into the close, closing higher on the day, but off the highs, as you can see here. Here's the highs, and right around here is where we closed. So off the highs, but off the lows as well. And a nice up move to bounce off the two-day pullback. Now, the key here, guys, is what we're going to want to know is, well, where's this market headed? And yesterday I drew in some key trend lines, some resistance points, and some support points that need to hold, or especially the downside support line is a very key support line that we really need to watch. And I'll draw it in right again here. All right, just take their line here and draw that underneath. Now, we bounced off of it yesterday, and on the gap down today, we were right on top of it again. They were absolutely able to save it today. Now, this line will remain intact and is going to be a very, very key point. You have basically the start of the line here, and you have a hit here, a hit here, a hit here, and now another hit here. The question will be is how many more times can this hit before it breaks, or does it break? Now, we could just start to rally up here now at this point and take out the high this point, and you'd have a nice little move possibly to some resistance points right around there. Okay, now that would be the next area of resistance if you get through that high. But on the downside, you have to also analyze, okay, well, if we break here, how low can we go? And there are support lines, but they're all minor supports on the way down. Ultimately, you could see a move to the lows again should that happen. So it's a very, very key line, and I drew this in yesterday to point out how key that line was. And sure enough, on the gap down today, we gapped down right to that line, and we're able to rally off of it. So they're not letting it break yet. Market sentiment is still too bullish to let it break, and it is options expiration week, and you just know that it's never going to be that easy. When you gap down on an options expiration week, to see it rally back like it did today and go positive even off of the CPI data is really no surprise. You have to anticipate the whipsaw of options X, and we preach that constantly. So in any case, keep an eye on these levels on the SPY, all right? You have that underlying trend line support. You have the upside resistance, which is right in this area. Anywhere between these two lines will be very, very good resistance on the upside, okay? And I'll draw that there, so right in between there. And then if you should break that, the next area to watch for would be this point right here, which I have at around 132.75, 132.50, somewhere in that range, okay? So keep an eye on that. Now let's go to the Nasdaq, because the Nasdaq has been a monster. And the Nasdaq had a 2-day pause. The S&P had a 2-day pullback. The Nasdaq had a 2-day pause. And what you can see here is that the Nasdaq pause was just a couple inside bars here. Didn't ever really make a move down. In fact, yesterday when the Dow was down over 100 points, the Nasdaq was down measly 2 points. Almost no pullback. The tech sector continues to be very strong, but it is into this resistance point, and this is a definite resistance area right in here, which is coinciding with the 50 moving average. Now, if it breaks above this, it could easily get a move up into this point, somewhere around here on the next leg up. Anywhere between these two lines here, somewhere right in there. All right, that'll be the next time it enters into some major resistance. This would probably be the first point, and then if it gets through that, this would be the second point to look for a hit, which would be the triple top from this line over in this portion. On the downside, you have to worry here as you are at resistance, all right? And again, I want to remind everyone, the Nasdaq, until it breaks above this channel that I've just kind of drawn in briefly and sloppily, is in a channel here on the upside resistance points. On the downside, it could move back to this 50-20 moving average area, or wherever this 20 starts to move up. And if I extend that line, it would be somewhere around there over the next few days. So keep that in mind, folks, is that you have that issue. Right here, if you break above, you could have a very nice move up. But again, you're into resistance here. On the downside, a pullback could yield you a move back here. All right? On any type of pullback, you will look to buy the Nasdaq, in our opinion, because it is the strongest index out there, and you always want to stay strong. All right, the Nasdaq's not dealing, the tech sector's not dealing with the financial woes and so forth. So you have a lot better a chance of on a pullback being long that index and making the most money. Okay, so keep that in mind. Now, one stock I want to point out is Apple. Look at this Apple chart. I mean, it's just been up constantly. It closed up just 2 pennies today as it is pausing as it's hitting this resistance. And look at this resistance here, guys, right into this line. All right, you can take these 2 lines that I'll draw right across. And look at where it is. And you can see why it's resistance. You have a hit here, hit here, hit here, and an area right in here where it was pointing to this point right here, and that's all major resistance. So Apple, after a major extension move, is stalling here. Now, whether or not it breaks through, that's up in the air, and the market will tell you. If the market continues to roll up, it's going to take that out. I mean, it's a market stock. If the market goes or if Apple goes, the market generally goes with it. But again, you're just like the Nasdaq was getting into a resistance point, you're at the near-term resistance on that point, as the Nasdaq again has not really pulled back, neither has Apple, as you can see, and that's an impressive move. You want to tip your cap to that, as it is a fantastic move up, really with no pullbacks in the last week and a half on Apple. All right, should Apple get through that point, then you can look at near-term resistance being right around here on the chart, and then also more resistance, obviously major resistance right up here. All right, there'll be major resistance right around that 190 area where it got to before it pulled back. Okay. Google, Baidu, Research in Motion, all very strong today. Amazon continuing to be strong. Let's look at the XLF. XLF had a nice little pullback, but it was able to regain some strength today. And you can see the XLF is now hovering in a sort of a sideways channel. From the tops there where you had a double top, and then you pulled back again, to the bottom of the channel right around here. All right, and we were able to bounce off that yesterday, and they were able to push it back up. Now you can watch, and you can see this area right down here is almost like a little bit of a gap. It did fill that gap intraday here, but you can still see that area where it gapped up on this day, and I'm pointing to this point right there in the chart, as opposed to if this were able to break down below this, you're looking for a move possibly back down to this point here, and very likely, should it break that, well then you're talking about a possibility of a move down into that support areas at the bottom, right in this area right here. Alright, so keep an eye on that as well on the XLF. On the upside, you're obviously going to have resistance here, and until we break that, I'm not going to go into the upside on that, although it looks to be just glancing, and I'd have to do the calculations, our proprietary calculations, to really get an exact number. And that's one thing I want to point out is I'm kind of doing this on the fly here, folks, just looking at the charts, analyzing, to get the exact numbers of the turn dates and so forth. We do our hardcore calculations. All right, so keep an eye on the charts here. As you can see, the levels drawn in on the charts. One thing I would point out here is look at the light volume on this consolidation move here as well. All right, relatively light volume on the choppy trading as we're staying in this channel on the XLF. Now, solar stocks had a decent move yesterday off of the move in oil. They pulled back a little bit today on the most part, although some of the Chinese solar stocks like Solar Fun, SOLF, had a nice move up today. You can look at the TAN, though, TAN. Look at this TAN chart. This is the ETF for solar stocks, and you can see as it is trying to make a bottom, or at least attempting to, and we'll have to watch if it can break above this 20 moving average. If it breaks above, it may have a little more upside to it, as the solar stocks, a lot of them have been beaten down. All right? Other than that, oil pulled back today. The GLD had a pretty strong drop again, testing the lows from 2 days ago. Watch this support line. If the GLD breaks down, we'll look for the next area of support after the one-day bounce. In general, these are oversold still, and they remain so it wouldn't shock us to see a bounce in the commodities again into either today or next Monday. Take care, guys. Join the chat room. Join the Swing Trade Alerts. We would love to have you. Take care.